Hey guys, Mike here. So obviously you probably heard the Kiss of Death is official now. We did get it on the monthly chart. I'm going to go into that. I did a video probably about a month ago and told you I'd be tracking it for you. And for short term though, it's not as bad as you think. So give me a chance to explain that. It's actually what I want you to take away from this video. For the long term, if it plays out, it is horrific. There's no sugarcoating that. And so I just want to put that out there. We got a lot of stuff to cover in this video, so we're going to get right into it. But I always say a picture is worth 1,000 words, guys. You can just see the devastation that's been done globally. $30 trillion in value wiped out, as you can see on a global scale right there in market cap. This is the bonds. I mean, holy moly, none of them have been spared. 2-year, 5-year, 7-year. This goes all the way back to, I think, the 30s right here. And you can see just how bad it truly has been. And you can see right here, the 10-year, 20-year, 30-year, you name it. None of it's been spared. And so getting into the Kiss of Death, I talked to you guys about what this is. This is when you're at an all-time high. You come down, you break the 21 monthly EMAs, the monthly chart. It closes below that EMA, and then it does a kiss, which you can see up against the line right there, the 21 EMA. And then the death is when it breaks that low that was recorded when it broke the 21 EMA originally. And you can see that's exactly what just happened when we closed out the month of September on the chart right here. We broke down below it and closed below it. And just to make sure on the same page, this right here is the kiss, where it kisses that 21 monthly EMA right here. So that is the kiss. And then we thought we were going to move up. We actually moved up above it for a little while there. But then this right here is the death. We closed below the original closure down there. And so that's the death for us right there. And so that's what we're looking at right now. And if we go back to 08, you can see right here, as we come down, we had the close below the 21 monthly EMA. So that gives us our low we're looking for right there. We came up, had the kiss, and then close. Some people say that next candle is the one that broke it, but I didn't see that. It was actually the next one beneath that, where it actually broke officially that low, and then a little move up. And you can see the downward spirals last time we went to in 2008 are horrible. This is the .com bubble. See it come down, close, kiss right there, break that low. That's the death part. And then you can see we sold off more. And then from there, it dropped another, I believe, 50% from there over the next 2 years, actually. So it lasted a long time. And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. And I just want to say, I'm very selective on this, but Seeking Alpha reached out to me and said they're offering a $99 yearly special instead of the $239, which is what I paid a year ago. But I get a lot of information from this site, from the charts to the news, everything you can imagine. So links down the bottom if you want to check it out. Only $99 a year right now is a special going on. And so getting back to, obviously, yes, when the Kiss of Death happens, from a technical standpoint, is a disaster if it carries out. It doesn't always carry out. In 2015, it did not carry out. It was a fake symbol. It broke, gave us the kiss, gave us the death, and then proceeded to move on. Now, of course, 2015, wasn't a whole lot going on that I can remember back then compared to what it is now, compared to what it is 08, compared to the .com bubble, compared to 1973, 1967. There is multiple years that this has actually happened. But here's the one thing that's really common with all of these scenarios, right? This is what we're going to look at, and pay attention to this because this is what I want you to take away from the video. You can see, yes, when you get the Kiss of Death for the long haul, it tends to sell off quite a bit. But look what happens in the short run. We came down, we broke, we moved up. Now I want to go into the daily to show you this run up. It may not be huge, but this is the S&P, and this has to be on the S&P. You can see popped almost 9% in a month right there, which is a pretty good move for the S&P on a regular time frame, right? Look at 2000, the .com bubble, 2001 right there. You see, we sold off a little bit more once it was claimed, about another 13%, but then look at the run it took. We'll go to the daily. Look right here. We sold off a little more once the Kiss of Death had been confirmed right there. I think 15%, but then look at the move back up. We ended up moving up almost 16% in 56 days. So that is a really good move up, which means the stocks were way higher than that. So that's what I want you to take away from the video of what can happen. And the reason why I think this happens is because in that scenario, I don't remember the .com bubble. I mean, I was in college. I didn't have any money in the market. I do remember 08 very well. And if you've been through any of these, what do you remember happening during that time frame? It was the fact we were already in a major sell-off, And what happened was in '08, especially when you saw that big trickle down, that was like a Lehman Brothers moment. I believe Bernie Madoff had been busted as well, and all the rich people were losing their money. Everything was going down, okay? And so things are just so bearish at that moment. And I think it's, you're going to see it even worse now, because what do you think the algorithms know? They know this got triggered Friday, right? They know we closed down that monthly chart below that, right? A lot of traders know this, right? A lot of options traders, all this stuff. But what has been happening? The bearish sentiment is already through the roof. And to prove it, we just literally set a new record. Check this out. This is how bearish we are. We got 2 weekly sentiment readings of bearishness below 60% for the first time ever that this happened back to back like that. And as you can see, I mean, this chart's worth 1,000 words, right? Large option traders once again established record hedges. Look at this. That's how far down. I mean, people are buying puts like it's unbelievable. Like it's going out of style. Look at where it was before the low was. What was that, like 09 or something like that? It was like -2. Look where we're at now. It's not even close. I mean, the bearishness has just gotten to the extreme levels I've showed you on many different other indicators. And so I think that's what ends up happening. And what happens when we get just extreme bearishness going on? The market usually moves in the opposite directions. Market makers, all that stuff, and they're going to sit there and let traders win, right? And investors win. They got to protect themselves. And so this is when you see major manipulation going on. Remember, the market can separate itself from the economy. It's done it multiple times. We've seen it multiple times. We witnessed it in 2020. The best example in history. Will probably never beat that example. But also, what do you see happening in October coming up? And this is why a lot of people are calling for this. In October, there can be a huge catalyst coming up. I believe it's like October 16th. And there's a couple catalysts actually, but this one is the Chinese Communist government, if I read this correctly, will be meeting, right, about policies and things of that nature. Remember, they've wrecked their economy with a zero COVID policy, all these shutdowns, right? Imagine, and this is what a lot of people are speculating is going to happen, because they've ran their economy into the ground with this, because the president's under a lot of strain now that he can be voted out anyway. But also they're doing stimulus, they're telling the banks, buy stocks, do all this crazy stuff, and lend to the real estate developers that are basically just imploding to keep things afloat. Well, what's one of the easiest ways that costs no money to start having bullishness happen in your economy is what happens if they come out and say, we're going to go away from zero COVID policy. We're going to get away from that. No more lockdowns, no more shutdowns. Can you imagine the response in the market? I mean, you saw what happened the day England said they're going to start buying bonds for a couple of weeks, which is minuscule compared to what that China news would do, right? I mean, that would be something for longevity. Say, okay, we're not going to shut down anymore. Okay, great, because not only does it for the economics for like spending and stuff, it helps supply chains, helps globally, right? And they're the second largest economy in the world. If that happens, huge speculation. But if it does, that would be enormous. What else is going on? Seasonality-wise, you see, and we showed you this, October, September, I said months ago, was like the worst months. And it played out that way. They were absolutely horrific. But October, November, and December are actually much better months in the market, right? Because why? Really, because you're coming off terrible months in October, September. So you get these huge, everybody's buying into it and all this stuff, buying calls. We're coming into the holiday months, which are supposed to be good months for shopping and stuff. And so that's one big reason you see it. So now you're actually coming into months that are supposed to be positive. So people kind of look at it and go, oh, well, these are supposed to be positive months. Will they be? We don't know. This is the weirdest year ever. Probably it will probably go down as the weirdest year in the market on record. That's what it will probably go down as, honestly. A year of first. I'll keep saying it until we get to the end of the year. I mean, the 60-40 portfolio has been the worst ever. Bonds have performed the worst ever. There's no place to hide, right? Real estate's all over the place right now. And, another thing to look at, I'm telling you, we've looked at this before and it played out. Smart money versus dumb money in the S&P 500 right there at the top. You see smart money, dumb money. The huge gap, once again, is forming to where smart money is actually nibbling and buying and stuff. And they call us dumb money, but we're really not. But, I mean, we're just not, right? We run for the fences, and so, or the heels, that is. And so we've had this before. We had it before the last rally. I think it was another rally. It was in March, whatever, when you had this huge gap right there. And so when you have this, again, when things get fearful, big money tends to start moving money into it because they know that's usually when you see the big moves and stuff. And of course, when all else fails, I always look to see what Jim Cramer's doing. I say this jokingly, of course, and he just said, I believe it was Friday, Chart suggests it's way too early to expect the stock market to rebound. And that could be the case. There's no ifs, ands, or buts about that. And I actually think we actually will sell off a few more weeks. I mean, it wouldn't surprise me a bit, right? If that was the case. But understand, I believe we're sitting right on the 200 weekly EMA, if I'm not mistaken. And so we're sitting here at this pivotal level that if we break below that, no doubt you're going to see more selling. We just broke the June lows. That's usually very bearish, right? But I've showed you how many times the bulls and bears battling it out, right? Trying not to give up certain ground. And so, you know, for the short term, I'm talking when I say short term, I mean like the next 3 months or something. That's short term. You know, is the market going to keep going straight down? It should not, because what do we know? Everything sucks, right? When everything sucks and the market keeps talking about it over and over and over and over, and you see the news channels just getting like things are coming to an end, that's when you'll see that short-term bounce. We saw it in June. We saw it back, I believe it was in March or April, whatever it was. You know, you see that, but for the long term, there's a reason why people are calling like between like 3,000 and 3,400 on the S&P, somewhere in that range, which is a huge range, by the way. But, you know, yeah, of course you expect it to go down. I mean, you got everybody and their mother, you know, calling for the recession to come in 2023 now, which we talked about, first, second quarter, somewhere in that nature. But again, it'll always come back to people think that we're way weaker than we are as far as the consumer, but the consumer keeps spending, right? We keep spending, wages keep going up, or at least are higher than what they were, right, before pre-pandemic, so 2019 area. A lot more savings, a lot more equity in the house. We're just in a much better shape in that way. And so I think that's why third quarter earnings are so huge. I cannot wait to hear them. I cannot wait to hear what the companies have to say to see if this is when we finally see the break, right? Because everybody's waiting for the S&P, like forward PEs, all the fundamentals to come down in line between like, I don't know, between 13 and 15, somewhere in there. Well, we'll have to see, right? And I think that'll come back in line when finally oil stocks really break and the dam breaks, right? And when will that happen? It'll happen when we finally officially or get called into a recession, or maybe right before it, and that means you have a major economic slowdown. And so that's what we're going to have to see, and that's what I'm waiting on as well. But I just want you to look at this and say, yes, the kiss of death is a bad thing. But we could see a bounce as you saw in 08, 2001. It happened multiple years before that. I just usually don't go back before the 21st century because it was pre-internet and it just doesn't make any sense to me. So anyway, but it is out there. So if you got anything out of it, hit that like and subscribe button. I really appreciate it, guys. And I'll end up seeing you tomorrow.